Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, June 29th, 2010. This morning we're saying that the party's over. And one of the reasons we're saying that is that right now the markets are in major risk aversion mode right now, and we're seeing stock market sell-off around the globe. I just want to give you a quick heads up. We had some selling overnight in the Asian markets. The Nikkei was down roughly 1.25%. The Hang Seng in China down 2.3%. We've got European markets down across the board anywhere from between 2 and 3%. And already we've got our markets down here in the U.S., which just opened down anywhere from 1.5% to 2%. So we're seeing some selling happening, and the reasons that this is happening is we've got heightened concerns coming out of the Eurozone about the debt crisis. Also, there was we had some news from China that their leading economic index had its smallest gain in nearly 5 months. So we could be seeing signs that the global economy is going to be slowing down, and that's making the market very nervous. So let's just take a quick peek here. We're looking at 4-hour charts, looking at Euro USD. As you can see here, boom, looks like Euro's been selling off down to 121. Just want to see if there's any support around here. We're going to take a quick look at a Fibonacci retracement on this level, and you know what? Hey, it looks like we're sitting right at the 50% retracement level from this move higher. So, if we can hold on here, we might see something happening, but right now I think we're going to pull back at least to 121, and if we break through that level, we're going to go lower as well. So that's what we're seeing so far this morning. Okay, we had some got some news coming out. Home price figures in the U.S. were a little bit higher than expected, and we've got consumer confidence coming out in about 20 minutes. Now, we're going to have to see what that happens, but I don't know if that's going to be enough to flip the markets around this morning. Overnight in New Zealand, building permits were lower, okay, and Japanese jobless rate increased to 5.2%, which was higher than expected. I just want to take a look at the Kiwi yen here. This is the biggest mover here today. And as you can see, we've just got massive risk aversion, unwind to carry trades, Kiwi selling off versus the yen. We can also look here at the Aussie real quick. Aussie versus USD, same sort of deal. We're seeing risk aversion. And, people are concerned that if a slowdown in the Chinese economy, plus if they allow their currency to float and it gets stronger and they don't, continue to buy stuff from people, that economies around the globe are going to slow down. So that's what we're seeing so far this morning. Just a classic risk aversion sort of day. Now, also in Europe, I just want to go back to Euro USD. They've got this bank stress tests that are coming up, and now they're requiring the banks to also release their exposure to sovereign debt, which is bound to uncover a landmine or two out there, depending upon what the banks have. So I think there's a lot of fear right now that this problem could potentially be bigger than people are expecting. So we're going to have to see what happens with the euro, but I expect this to go lower, and we're going to see continued dollar strength. We've got pound today. Pound still holding 150 versus USD. You can see that figure right there. That looks like we're still in an uptrend for the pound. The market reacted favorably to Britain's austerity measures and budget proposals, so I think the pound's going to be all right for a while, even if we have some heightened risk in the market. Now the yen, we mentioned that yen is higher. We'll just take a look here versus USD. Okay, you can see we're seeing yen strength here, just holding support around 88.50 right now. But overnight, unemployment ticked higher to 5.2% versus an expectation of 5%. And then Japanese industrial production and their household spending also fell. So it may be a sign that the economy is slowing down there. But nevertheless, we're seeing yen strength due to the unwind to carry trade. So we all knew it was just a matter of time before the global charade was exposed as unsustainable. Now the market's starting to realize that it may be time to pay the piper. Obama did his best at the G20 this weekend to try and get everybody on board with the continue the party, continue the spending, but that fell primarily on deaf ears, and folks said, yeah, that's fine, we'll continue spending as long as we're not seeing growth, but we're going to cut our deficits. So like it or not, that's what we're doing. So right now, a lot of countries are just trying to cut their losses and get back to economic health. Now, the way that you do that is by taking the medicine of fiscal austerity and debt reduction. I know it's painful. People don't like it, especially politicians, because the pain that's felt by people in their economies is typically directed at them. So that's what we're seeing now. It's more political than anything economic, because regardless of whatever type of social engineering politicians try to do, okay, they cannot control economic cycles. And the longer they try and prolong the unprolongable, okay, the worse it's going to be. So, right now I'm of the opinion that it's better to just, cut our take our medicine now to cut the spending. Let's get back to some sort of health and, try and move forward. There are some good stories coming out of the economy, particularly corporate profits. All right, now we know that that's because they laid off a ton of people, but corporations are back to being profitable. All right, and you've got companies at very low multiples right now. That's why the stock market's been holding up as well as it has been, because believe it or not, there are some good stories coming out of stocks, even though the overall economy is set to slow down. And you know what? That's okay if we have economic growth, but it's slower. I mean, you can't move at this breakneck pace at all the time. And you see that in China. China, grows somewhere around 8 to 10% a year, which hey, that's unsustainable. And once people start to realize that and say, hey, wait a second, things are going to start to slow down, maybe we should pull back as well. But if these guys continue their spending, it's going to get to the out of control point where it's beyond recoverable, and we're going to end in a situation of just slow deflation as consumer confidence and consumer activity wanes, because people are just afraid of the unknown. So, right now, there is no better time to get into the Forex market to protect yourself from global economic conditions. Right? Don't be one of the ones left standing when the music stops and there's no chairs left in the global game of musical chairs. So that's what we've got for today. I expect there to be increased volatility this summer. We talked about summer slowdown usually occurs. Well, perhaps not this summer. We're going to see gains, we're going to see losses, we're going to see advances, we're going to see retreats. This is basically what we call perfect trader's market. So, if you were thinking about trying to get into this market, now is the time to do it. You got to protect yourself in these uncertain economic times. So that's what we have for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.